Let's just take a look at those foreigners on the market. Now, we saw that they accounted for only 36% of turnover yesterday. Securities Africa's Michael Barnes is saying that all the international investors he speaks to are bearish on Kenya's stocks. Why are we seeing this trend when it comes to international investors, and what type of catalyst could turn this around?
Well, thanks a lot. You see, we have a situation here where we have the shilling, our local unit, hitting a record highs of 92. And what basically this means that any shilling pricing is not favorable. So if you have an investor who got in on a dollar, or got in from a dollar pricing to a shilling pricing, it's cutting down his losses. It's all about stop lossing. And we are seeing that for this to be reversed, I mean, we need to see CBK come to the market, trying to spur, prop up the shilling in a bit to bring on board these guys. But at the moment, I think we might see sustained withdrawal from the foreign guys. And they might leave the market to local guys. And the local investors, you realize that most of them, their activity is either they're spectating, sitting back and waiting and holding on, or they are all pull backing, withdrawing their gains for a while. And this is really bringing down the market. If you look at since the week began, it's a bit volatile. And it all boils down to the shilling. You realize that when the shilling is at this level, I mean, there's going to be some bearish prospects on the economy. Sorry?
No, sorry. Let's take a look at some of those stocks where we see particularly falling, stocks that are falling. East African Breweries taking a hammering once again. It slid 2% yesterday, 188 shillings. Now it's down 9% for the last 3 months. What are your thoughts on why investors are selling the stock? We had all that activity around Diageo buying Kenya Breweries from SAB, the remaining 20% stake. Kenya Airways coming out yesterday saying they're going to be increasing their fleet by another 10 airplanes. But why are investors selling the stock?
If you look at for EABL specifically, two issues. One, if you look at the trade trails for the EABL for the last 3 months, it's been riding on foreign investor support. A lot of it, I mean, hitting a high of 215 back on the back of sustained foreign investor support. Now, when you have foreign investors withdrawing such levels, it's going to bound to fall because that foreign investor support is no longer there. And we might see actually a technical charts point the fact that the stock might drop to as low as 170 shillings if foreign investor withdrawal continues on a consistent basis. The second point of the stock is that when you look at the company's prospects, it's a huge importer. It needs to import certain key raw materials in its production. And you look at the shilling at 92, it's not good for its importing business. And so this will really escalate the operating cost of the company. And the market is really pricing in this fact in the stock. And that's why it's really discounting the stock at that level. And we might actually see further discounting of the stock going forward. Coming on the fact that they're going to buy out Submilla's 20% shareholding in Kenya, I think it's a fair value. But you realize that it's not going to have an impact on the cash flows because they're doing an IPO in TZ, and all the proceeds from the IPO may as well be used to purchase this shareholding with Submilla.
And of course, when I say buying 10 airplanes, I was actually referring to Kenya Airways there. Apologies for that. But let's take a look at Kenya Airways, another stock that fell 2.5% yesterday. It's saying that it could cost around $40 billion to buy these 10 aircraft. The first one set for delivery next year as it funds its growth expansion on the continent. It's set for a rights issue of around 23 billion shillings late in the year. Has it indicated how it's going to fund the shortfall when in relation to the 40 billion shillings?
Kenya Airways, I think, in my opinion, my take is that the global airline business, it's on a free fall. The correlation coefficient between airlines and the global fragility is almost close to 1. And I think for Kenya Airways, a rights issue is one of the best options they have for raising funds, because if you look at their books, they are already heavily leveraged. If you look at leverage levels of in excess of 120%, and this is not good for any company, I mean, in terms of shareholder wealth creation. if you just compare the average cost of debt in its books, it's in excess of 5% for 2010. And compare that with the return on equity, it's actually, you get a negative figure. And you look at that, they're saying they're going to get 10 more Embraer airlines from Brazil, and you realize they want to raise 23 billion compared to 40 billion. How are they going to fund this revenue? It means they're going to take more debts on their books. And taking more debts on their books is not a good thing for a shareholder return. And I think the market will continue to discount the stock based on this. It's a heavily geared business, and I think...
So you'll be staying away from it at this stage?
Yes, basically any investor will stay away out of the stock,
Now, another stock to just keep an eye on is Unga, which fell yesterday as a result of this looming grain shortage in the country. Which stocks would you be wary of getting into at this stage, given the fact that we have this food crisis as a result of poor rainfall in the area?
Unga Group, we have millers across the country closing down operations, actually, because of a shortage of maize. You have Mombasa Maize Millers, United Maize Millers, just running the wheat section of the business. And the maize milling is actually down in the close-up business. And this is not good for the business, for the business community in this country. And I think, looking at the market this week, I think the best strategy at the moment is, investors should hold on to their horses, hold on the market. It's a bit volatile. And the best thing right now is the big guys, the fund managers and the foreign fund managers. I think the risk-free asset classes are really, really attractive at the moment. You're looking at the government security treasuries. You look at the day's auctions, 2-year coming at 12%. That's really good for any investor. It's not really risk on at the moment. It's not good to risk on at the moment. It's really volatile, and the market, the investors should just sit on and be spectators on the sides.
George, thanks.
Continue warming the spectator seats,
We'll be watching those developments very closely, and of course the market has only increased by around 1%, equity market that is, versus those bond yields which are sitting at around 12% and up and north of that.